What's going on, guys? What up? What up? CR, what's going on? You want me to take a peep at TSM? I'll take a peep at it. I believe that's Taiwan Semi, if I'm not mistaken, but I'll take a peep at it. Actually, well, I guess my ping probably gets to everyone a little delayed. Let me actually take a peep at your TSM for you real quick. Let's see what's going on with this one. You have a little bit of a nice little ascending, broadening wedge type of action going on here. Is what I kind of noticed right off the bat. You can see a nice little descending broadening wedge. You basically wicked the top of that and you pretty much regressed. I want to say you basically have a nice little support trend line here as well. So I'm inclined to say that you're likely going to end up testing this top end of this resistance here like once more. Now I would hope that you don't end up double topping here at this 91 mark. Otherwise, you should get up towards this 91 half, towards the top end of that resistance before you pretty much start to regress. So a strong push out of this today. As we can pretty much get maybe likely another leg, or we start to get a little bit more squeezy than what the action was, price action was today. I would assume that you get another, pretty much another full body candle here to the upside here, and that would likely end up putting you right up towards that resistance here at that, basically that 91 to 91 half. So the only thing I would say is that yes, you should have further upside here. Obviously, you can get your continuation here over 89, but just be careful about a double top at that 91 level. So obviously you have that nice little wick left there up there at that 90.98. If this taps 91, that'll likely signify a double top at that 91 level. So that's what I will be careful for. All right. But other than that, I like continuation here. You get this back over 89. As you see, it's kind of pushing here after hours. This should likely end up seeing that beautiful continuation over 89, and that's about another $3-ish move to the upside. All right. Disney going bonkers? Are you serious? Yeah, I should have knew about that. God damn. All right, it's gone. Yeah, she's gone. See, and this is why I say I hate rising wedges. I literally hate rising wedges in these conditions because if you basically would have saw this pretty much in a normal market condition, you would have looked at this little rising wedge and you would have said, "Oh hell no, it's not gonna go anywhere." Now look at that. It literally just popped beautifully, and I kind of figured it would. I know Netflix has just been a monster. Roku's been a monster, so I'm sure I'll take a look at those in terms of sympathy wise. Now going out to the daily, let's see where we pretty much see some daily. Actually, I think the weekly probably will give us a better image. Where do we see pretty much where's our overhead resistance? Now, I can see right off the bat we do have some resistance right here at this 121 mark. So 121 is likely where we see some resistance, probably pre-market on the back end of some analyst ratings and whatnot. So 121 is going to be that key level there. Otherwise, if you crack 121 here, I think it's pretty much a landslide. I don't see much, nothing but thin air up towards 128, likely 129 pushing. So I think there's a pretty big gap that you have in terms of this pushing even further higher on the back end of this getting over that 121 level. You're looking at about a $7 move to the upside here within, whether it be by the end of the week or it's within just a matter of a few days rather. All right. So I like this one over 121. I will be looking at this towards 128, 129 calls, and you like to go about a week or so out in terms of getting some, buying some time on your side. All right. But I like this one. Like I said, I hate the stupid rising wedges all over the place. And I'm sure Jay, you probably noticed yesterday, like towards the end of the day, going into CPI data, I don't know how many rising wedges we had in certain places. Microsoft had one. I mean, obviously we saw the blatant one on SPY off of the daily, which I'll get to in a quick second. I know that I believe I also saw one pretty much going for Tesla as well, and then I saw one also on Meta. So rising wedges were all over the place, but in this kind of bear market rally, who cares about rising wedges? All right. Let's get into futures real quick, and then I will take a look. Actually, let me take a glance real quick. What is Netflix doing? All right, Netflix is relatively flat. What is Roku doing? Is Roku doing anything? Okay, Roku, no response. All right, so that's kind of interesting. No sympathy off of that. All right, let's get into feuds real quick. All right. Going into pretty much the daily here off of feuds. Obviously, the biggest thing that pretty much stood out to me was pretty much looking at descending broadening wedge, and that's one of the things that I've been on, I guess, the past few days, looking off of the daily. You guys pretty much know at this point is know basically what's my favorite pattern in the overall market is a descending broadening wedge. So we just continue to grind higher. Obviously, you can see basically a little blatant little rising wedge action that we've had. We also have a nice little anchored view up that basically dates back towards our highs of the beginning of the year. So we ended up finally pretty much smacking that anchored view up from all-time highs at 4204. Those of you that heard me on live that I was on, I was pretty much talking about breaking over that 4204 level, and that's the exact same level that we kept pretty much hitting our head on for most of all of the day. All right, so 4204, we want to build that base. We want to see that pretty much hold or even snap back if we get a little bit of a dip buy opportunity tomorrow. You want to see this reclaim that 4204 tomorrow, and we should get continuation up towards the top. Now, here's the thing: top end of this little rising wedge action that I see is towards 4240 is what I'm looking at. That's pretty much what I'm looking at in terms of my top overall. Now, this is pretty much getting as squeezy, and this is usually on the last legs. I think Avery would likely say it's like a wave five. Is that this is where it can get really explosive for that matter. So if we really do explode over 4240, this is when we can start talking about specifically the downtrend resistance of this entire descending broadening wedge that puts us up towards 4330. So that's pretty much a very big gap in terms of stopping out and getting a strong reversal at 4240 versus getting a stronger move up towards 4330 into the downtrend resistance. So that's where I'm pretty much looking at. Obviously, we're going to have to see how momentum continues to further build. What's really going to lead the way? You pretty much see Apple for most of the day. That was going sideways until after lunch hour that started to pick up some momentum. Tesla, I think it had more so of an abysmal day. It gave back the entire gap up that we saw. We thought with maybe at some point when we saw a 30-point gap up that we would likely see maybe about a 60, 70-point day. That was not the case. So we want to see pretty much if Tesla can build some momentum, get this back over 886, and we can start to make a move and pivot off of 911 to build a bigger base. All right. So I'll keep an eye on that one here tomorrow. So just keeping an eye on what's going to kind of lead the way here. But other than that, again, like I said, 4240. If we get over 4240, I'm looking at 4330 as the next major point right there. Otherwise, if we start to lose momentum, as in the case there be that obviously the first reaction is usually the wrong reaction kind of scenario on the back end of the CPI, that's when we start to pretty much look at the downside here. And then, of course, you're going to be looking on SPY 411, 407 for those of you that pretty much look at SPY. Those are going to be your pretty much your big pivotal levels on the downside. All right, if we do start to roll over. All right. Let's catch up on some of that. Daniel, can I look at Mara swung some calls at close? I know that I believe Avery probably put you up to that. I know that he was talking about that in the dojo. So I'll take a quick peep at it. Lobo, what's going on, my dude? Where's the parrot? I have no idea what you're talking about, my guy. All right, let's get into Mara quick. I'll take a peep at it. I have not looked at this ticker in quite a minute. I know that crypto had itself one hell of a day. That was just a monstrous type of day that it had once the news came out. So I do expect pretty much crypto to basically continue this momentum here. In terms of where I'm looking at for your short-term supply here, I'm basically looking up right up towards this 19, high 19 level that you want to say. I'm looking at resistance right here. So roughly right around this 1980, 19.77 mark is what I'm looking at in terms of a hard resistance level. You're likely your basically your supply here, and that kind of dates back to the range of where you kind of build a base between the beginning of the year up until the third week of April, and then you finally broke below that 19 mark. So I would expect that we end up testing that. How quickly we end up getting to that level, that's a bigger question mark. Be honest with you, if we do push as much as I expect tomorrow, we kind of get up towards that 4240 on ES feuds here. I would not be surprised that feuds continue that crypto pretty much runs alongside this, and we can likely end up seeing Mara here $19 by the end of the week at the very least. Otherwise, if we start to push north beyond that $19 mark, then your next level of resistance is sitting right around this 22 level. So 22 half is what I have. That's the next big level in which I'm actually looking at is that 22 mark. And that's basically another level where you pretty much teetered off of building that base at 19. That was your pretty much your higher end level where you either saw continuation back to the upside or you stalled out and you pretty much rejected. So 19.77, 1980. Otherwise, you break north of that. I'm looking at 22 to pretty much print on Mara here. So safe bet would be that we end up printing that $19 mark this week, and next week we see more continuation up towards 22. That just depends how rapidly this continues to pretty much push to the north. So if you're a risk taker, I think 21, 22 calls are likely the way to go. But then you end up starting to take and scale out of your profits at that 19 half to 19 high mark. All right. Um, Let me see what else was pretty much on my radar, kind of looking at things. Obviously, we saw the Apple wheel alert. That was a monstrous one that kind of took my attention today. Those of you that pretty much saw the TFC flow alerts, we had a massive order for that. What was it? Let me see. I actually want to take a peep at it real quick. Let me see if I can take a look at what the order was. I know they got October expiration. I know what it was. They picked up 165 puts. That's what it was on that wheel alert. But the biggest thing is that they bought a lot of time on that. That was pretty much the biggest takeaway. In terms of levels, we pretty much broke through what was most of my key resistance levels for today, the past few days, was that 168.64 level, and that literally just went for it. We saw the continuation that you got basically on the back end, if not during that lunch hour into the end of the day. So we saw that beautiful move, that beautiful push. Now, everything that I was looking at in terms of you want to see your minor flow, your level ones, level twos off of TFC flow, was looking at that ballpark number of 170. That's where I saw a lot of the calls pretty much going out to. Now resistance I'm looking at 171.18. That's the pretty much my over top pretty much is what I'm looking at 171.18, and I think that's where we start to see the struggle on Apple. Otherwise, if we break that 171.18, then what's the biggest and clearest picture is that you can see basically your ascending channel action, and you can see where clearly where the top end of this ascending channel is at this 171 half. So I'm looking at 171.18. If we do get that extra push, then you pretty much pushing towards 171 half. But I don't see us pretty much going on beyond 171 half. I'll likely end up having to analyze it once we get to that point. I don't think that ends up breaking beyond that standpoint though. All right, so that's pretty much what I'm going to keep an eye on. Otherwise, in terms of levels back to the downside, you're basically looking for this to break back under 168.65, below that 167.81, and then we can see this start to pretty much pick up some more momentum to the downside if the market does not have much more juice than what we saw today. All right. Lobo, take a peep at Walmart. I'll take a peep at it. Christina took the 9 to 177 calls on Apple at 79 cents a piece. I don't necessarily mind that. I can see why you necessarily took it. I would have to say that you pretty much start to look to take your profits if we get towards that 171, just to be safe on the safe side here, more or less. Is it entirely possible that we could push? Yeah, but I would want to see Apple push north of 171 half, and then I can see you pretty much getting that kind of movement up towards 177. If I pretty much look at it, I see why you end up taking that because there's also a gap here, and I would be all for that gap on Apple if we can break north of 171 half. But if we can't break north of 171 half, I don't think this gap fill is going to have much of a say in terms of getting that continuation up towards that 177, which is just roughly towards that, what is this, near around your April high that we had. So I don't mind it necessarily. You can end up testing that April high and getting that gap to 174. The only thing is try to be very cognizant. If I'm assuming you have more than one contract, once you start to get at that 171 level, just try to see if you can lock in some profits, just in the event that we do end up rolling over for whatever reason. All right. Otherwise, I would like that target that gap fill at 174, and I'm sure that contract price will likely even more than just triple. All right. Lobo, let me take a peep at Walmart for you. I haven't looked at Walmart in a minute. I'm not even gonna lie. I think it's been a while since I looked at this. Let's see what Walmart's got for us. I just want to see. Do we have a little rising wedge action going on here? All right, no, not really. So looking off of the daily, let's see what the daily kind of gives us. We had a nice little topping formation. You had one top, two top. You could see the regression that we ended up having. I would have said this had a nice little diamond top action, but it doesn't because it's not a clear diamond top. So I would say if I'm looking at upside here, you want to see this break north. Let me get a cursor here. You definitely want to see this end up breaking north here over 130.73. That's the level that I would be looking for. So 130.73, that's the level I would particularly like for the upside here. In terms of getting continuation here, you definitely want to see this break north of 133.12. You break north of 133.12, then we can start to talk about testing the gap fill. Otherwise, if you don't end up breaking north of this 133 here, of this 130, then that 130.75, that's when you're going to start to pretty much see the rollover right back to the downside here. And then in terms of downside, you're going to want to look for this to roll right back over under 128.15. All right. So that's pretty much what I would say. I think the range for just the moment here is a little bit tight on Walmart, and I do likely think that's because of the squeeze in the broader market. Once we see this exhaustion in pretty much the broader market here, then I think that's likely when you're going to end up seeing a better and bigger move on Walmart for right now, in which case it's going to end up turning into a value play. For right now, it's kind of on the back burner. I don't think there's much fluctuation north or south just yet. But big level upside here wise is over 130.75. You get that, I think you can particularly go long on it. Otherwise, you break south of 128.15, and I think it's got a little bit more, basically a little more of a floor on it, and you could probably taste this back right back down towards 126 half. All right. Other than that, just to point out some things, I know that yesterday, if you guys saw relatively the semiconductor having their relative weakness, monster bounce back, I want to say. I am keeping an eye pretty much relatively on Nvidia. This is when I'm actually looking at potentially a little head and shoulders action. I do want to see if that ends up playing out. Maybe we get a little bit of a retracement further. Watching 183. If we get above 183, then that gets squeezy up towards 187.28. So I am watching that to pretty much form a peak of potential right shoulder. So that's something I am watching. We saw pretty much on the back end of Micron cutting basically their forward guidance. We had the bad earnings on Nvidia. That's nothing to pretty much wipe away. Obviously, they're going to continue to rally with the broader market, and that's what we're seeing. But once the market starts to roll right back over, I would assume that the semis are likely going to end up taking a bigger than expected hit. And that's why I actually do like the setup here in terms of Nvidia. I also do believe that AMD also has particularly the same setup. It's just a little bit more on a micro scale here. I probably dial down towards the 2 hour here. And if I end up drawing this out, which I would just get a quick tool, just give you a quick draw, you can still see that there is a ideal head and shoulders action that's still pretty much right in play. So I'm watching this one as well on AMD here. So I'm going to keep an eye on that one. In terms of basically my overhead supply, I'm watching on AMD. I'm watching this towards 101.79. We could probably tap 101, but I expect that to likely end up being the top here on AMD. So I'm gonna watch to see how the semis end up either contributing in this squeeze, this broader market squeeze, or do they end up starting to show the weakness beyond before major cap tech stocks basically are finished their move. So semis are going to be high on watch for me the next, I want to say, day or two. I want to see how they pretty much, if they start to separate themselves from a lot of these FANG or main names you want to say. I want to see if they separate themselves and start to show some weakness before the market rally just pretty much finishes. All right, that's pretty much the big takeaway. Other than that, I think you stay with pretty much your leaders of this rally here. Look to Apple, look to Microsoft, look to Tesla to pretty much carry the weight of this broader market rally. I know Disney is pretty much popping. I mentioned that one over 121. You should end up seeing that print up towards 129. We'll see how that continues to hold. That 121 level likely will end up being tapped probably tomorrow morning on the back end of analyst datings. So it'll likely consolidate here, probably push down about $1 or so, and then we should see it pop right back up tomorrow morning. So I'll keep an eye on that one as well tomorrow morning, and we'll see how that pretty much ends up getting a beautiful continuation. Christina, I'm losing my shirt on the AMD option. I'm assuming you meant short. Is that what you just meant? I'm assuming you meant short, not shirt. Um, in which case you ended up taking a short position on AMD, if I understand that. I assume that's what you kind of meant. That's why I say I'm still watching it up towards 101. I think we can stretch up towards 101, but that's where I'm looking to see if we get particularly a right shoulder to make pretty much form out the entire head and shoulders pattern alongside the same thing that's playing out with Nvidia. So it all depends on your stop loss if you actually do have a short in AMD, but the top end range of what I'm looking at is that 101 level. All right. Other than that, though, I think that's kind of short and sweet of what I'm looking at. I can give you a quick glance at, say, NQ feuds. Pretty much, you could pretty much see almost basically the same kind of structure of what ES also has as well. That descending, broadening wedge type of action. Anchored VWAP is still pretty much leveled here. We're watching 13, 8, 10 for pretty much our overhead top, which still gives us roughly about a, what, another 400 point move on Nasdaq to the upside. In which, yeah, if we're gonna make another 400-point move on Nasdaq, then it's more than likely that we end up seeing that 4240 play out on ES Fuse. So everything kind of plays in conjunction with each other. So we'll see how much more Nasdaq has. But just keep that level in mind, 13,810. That's where your anchored VWAP is, and we'll see if we end up hitting our head at that resistance before we get a U-turn. All right. Other than that, though, I think that'll probably conclude a lot of what went down today. A lot of just explosive movement. Now, see, this is where it usually gets hard, is because when you end up having such, data like this, and the CPI data basically just came in relatively short of what the market basically expected, right? And why did we end up particularly rallying off of that? Is because now basically your market makers, everyone's looking at the Fed saying that they can pretty much loosen up on their tightening, their Fed tightening that they've been doing. So now it's like, all right, is there a 50-point basis rate hike that's going to come into play, in which we kind of downgrade what our basically our last rate hike that was announced? So that's why you saw the immediate push, the immediate rally, but it was definitely a 50-50 ball that you were playing, trying to hold the swing overnight. So it's not something that I would pretty much, try to condone for everyone to do in the future. It's just like you have Fed minutes, you have these explosive moves, but what you particularly have to do is that you have to wait for the setup intraday and take advantage of that. And if I actually just show you really quickly, for those of you that pretty much you looked at the market this morning, you're like, but what the hell? How do I end up? Am I gonna chase? Am I gonna force the downside? Well, particularly everything was basically a pattern that we had intraday, and the first thing that actually stood out to me, the first pattern, was basically a descending broadening wedge. That's immediately the first pattern that pretty much played out to me once I saw how the market was pretty much starting to regress. And that was me waiting out the first, I want to say 20, 30 minutes to see how SPY was going to end up particularly reacting to either this strong gap up of getting a stronger continuation off of the gap up, or do we end up pretty much rolling over? And this is why I say, and this, I'm sure Avery's also preached this on live, is that try not to trade the first 15 minutes. And I'm sure a lot of you that likely ended up trying to force a situation to happen in the first 15 minutes, you likely ended up pretty much regretting it. So that's pretty much another thing. Once you typically have these strong moves in either direction, wait a little bit longer than just those 15 minutes. Wait for a pattern to develop. Wait for a setup. Wait for an opening range, a day open, or something to pretty much reject, pretty much signify how you're interacting with the prior day, maybe, or your VWAPs, or pretty much your moving averages before you just force the situation within the first 15 minutes of open. All right. So that's pretty much one of the big takeaways. Hopefully, you guys can pretty much learn from that. But again, I will pretty much conclude from there. I will see you guys on live tomorrow. Appreciate you guys.